Hi, Namaskara to all the viewers of this channel and also all my CA aspirants. My dear students, we are already into the depreciation chapter wherein four problems are being completed right. Please remember in every video, whatever the solution I am doing you, the question and answer in hard copy is being placed in the description box. You can open the description box, you can see over there. Fine, let us move on to this particular session, my dear student. The speciality of this problem is here part of the machine is being sold. What? Part of the machine. See here, X Limited had imported a machine on October 2016. Imported means purchase. What they purchased? They purchased machine M1. When? On October 2016 for rupees 1,28,000. For how much they bought? 1,28,000. And customs duty and freight 64,000. What? 64,000. That is to be added. And incurred erection charges of 48,000. That 48,000 is also to be added. The total of this comes to how much? 2,40,000 rupees. This is the cost of the machine M1. Did you understood? Another local machinery costing 80,000 was purchased. This is M2 purchased for an amount of rupees 80,000. On what date? On April 1st. Okay. This machine is purchased on 1st October 2016. That is M1 is purchased. Later, on 1st October 2018, a portion of the imported machine. Which one is imported machine? Imported machine is M1. Value 1/3. How much? 1/3. Got out of order and was sold. What was sold? See here, this is a first machine. In this 1/3. 1/3 means 80,000. 80,000 cost of first machine is sold. Sold for how much? 27,840 rupees. Did you understood what he is telling? On October 18. When? On October 18, a portion of the imported machine, 1/3, got out of order and sold for 27,840. Please remember, part of the first machine, 1/3 is sold. बाद में क्या हुआ देखिए ना उधर. Another machinery. What machinery? Another machinery was purchased to replace the same for rupees 40,000. So again purchased. Which machine it is? It is M3 machine. On the what date? On the same date. Depreciation to be calculated 20% per annum on which method? On the original cost basis. Prepare machinery account for 3 years ending 31st March 19. See, 31st March 19 we have to end. Means we can say that accounts are closed on 31st March every year. Depreciation is 20% on OCM method. Shall we write? First you mention depreciation is 20% under OCM method. Means original cost method. Means straight line method. Closing date when? 31st March every year. Fine. Now let us prepare the format. How many machines do we have? We have 3 machines. In that first machine is being divided into two sections. Okay. Now I write M1. What is the cost of the machine M1? See, M1 cost 2,40,000 rupees. In that, one third part. Here we have to take two-third part. Okay, this is the first part, second part. Now I write M2 and M3. Okay, shall I continue to read? When the first machine is purchased on 1st October 16. It is purchased on 1st October 16. Okay, what is the one third of this? 80,000. Two third of this? 1,60,000. Fine. That completes the first machine, right? Another local machine on 1st April 17, 80,000. When? 1st April 17, M2 is purchased. For an amount of rupees how much? For an amount of rupees 80,000. Then what next? On October 18, portion of the imported machine, one third. When? On October 18. Got out and sold for 27,840. When? 1st October 18. So now I write this, right? Sold on 1st October 18. For how much rupees? 27,840. Fine. Later what happened? Another machine was purchased to replace the same for 40,000. M3 is purchased for an amount of rupees 40,000. When it was purchased? On the same date. On the same date means 1st October 18. My dear students, this is all about the given information. Now I have to write one date, right? The date should be 1st October 16. I have to write the cost. Shall we continue, my dear students? We have to prepare for how many years? We have to prepare it for 3 years. Now, 1st October 16, accounts are closed on 31st March 17. Depreciation is 20% under OCM method. Now, M1. M1 means both part 1, part 2. One third part, two third part, both the part. Okay, M1. Purchased on when? 1st October 16. Means 1st October to 31st March. Tell me it comes how many months? October, November, December, January, February, March. It comes how many months? It comes to rupees 6, means 6 months. Use the calculator. 80,000 into 20% into 6 by 12. It comes to rupees 8,000. 1,60,000 into 20% into 6 by 12. That comes to 16,000. Do not go for calculating any depreciation on M2 because it is purchased on April 17 and nothing for M3. Now you close it off. Now what date I should write? I am supposed to write 1st April 17 as a balance. How much we are getting? 72,000, 1,44,000, same 80,000 and same 40,000. Now I am April 17, right? Now I should go for what date? 31st March 18. Depreciation 20% under what method? OCM method. Now part 1, 12 months. Part 2 is also 12 months. M2. M2 is purchased on when? 1st April, right? 1st April 17. 1st April to 31st March. That is also 12 months. Under what method? Remember, it is OCM method. Means OCM. 80,000 into 20%. 1,60,000 into 20%. This one also 80,000 into 20%. My dear student, no need to mention all these things. But you people are listening through the YouTube, right? If I didn't write, I think that you may not understand. That's why I'm going for all these calculations. No need to mention all these calculations. You can use the calci and work out directly. 80,000 20% means it comes to 16,000. Right? 1,60,000 20% means 32,000. 80,000 20% means 16,000. Put dash here. Now, what we have to write? We have to go for balance. When the balance is 1st April 18, balance comes to rupees 56,000. It comes to 1,12,000. It is of 64,000. Then finally a 40,000. Now we are into April 18, right? On October 18, part 1 is sold. When it is sold, this is for M3, this is for M2, this is for part 2, and this one is for part 1. When it is sold, see my dear children, October 18. 1st October 18. Part 1 sold. Underline, you put a box. What is a time gap? Please listen. What is a time gap from April to this October? April, May, June, July, August, September. Since sold on October 1st, we should not consider October 1st for depreciation. So, how many months we are getting? 6 months. Depreciation on part 1 for 6 months under OCM method, right? What is the original cost of the first part? 80,000 into 20% into 6 by 12 as a 8,000. Sold part 1. See, part 1 is sold for how much? 27,840. Now you use a calculator. See what happened. Out of 56,000, subtract 8,000, subtract 27,840. We are getting a result positive 20,160, and it is called loss, right? Because instead of subtracting the sold out of the book value, we are subtracting book value minus sold. So answer is reversed. That completes the part 1 sold. Now, when you people sold the part 1, what and all the machines left out? We have a part 2, we have a M2, even M3 is also purchased on October 18, right? So now let us write on what date? It is on 31st March 18, not 18, it is on 19. Because after what we call 1st April 18, the closing date is 31st March 19. Depreciation 20% under OCM method. On what machines we have to take? We have to take depreciation on part 2, we have to take on M2, even we have to take on M3. M3 we have to take from 1st October to 31st March, because the third machine is purchased on 1st October 18. It comes how many months? 6 months. Under OCM, right? What is a part 2 original cost? Part 2 original cost 1,60,000. into 20%. It is for 1 full year. 1 full year means 12 by 12 months. Then next, M2 is 80,000 original cost, 20%. Fine. What about this M3? 40,000. We have to write 40,000, 20%, 6 by 12. See what happened. Dash 32,000. This comes to 16,000. Here 40,000, 20%, 6 by 12 means it comes to 4,000. Okay. Now you work out a balance. The balance is on what date, my dear children? The balance is on 1st April 19. First part dash, see, out of 1,12,000, subtract 32,000, it comes to rupees 80,000. In M2, out of 64,000, subtract 16,000, it comes to 48,000. In M3, we have a 40,000, subtract this 4,000, it comes to 36,000. This completes all your calculations. Now what we have to do? We have to prepare a machinery account. Shall we prepare a machinery account? For how many years? For 3 years. We have to prepare machinery account for how many years? We have to prepare machinery account for 3 years. Okay, fine. Shall we write? Shall we start? See what happened. On 1st October 16, M1 is purchased. What is the total of M1? Total of M1 is 2,40,000. 1st October 18, 18 or 16? It is 16. It is how much? 1st October 16. To bank M1. Part 1 80,000. Part 2 1,60,000. The total is 2,40,000 is purchased. Right? Okay. This part 1 is purchased. When you purchased M2, we purchased M2 on April 17, means in the next financial year. But in that particular year, we charged depreciation. 8,000 plus 16,000 is comes to 24,000. On what date? On what date? 31st March 17. By depreciation 8 plus 16, it comes to 24,000. Put the dot for the dates. By balance carried on. 2,40,000 minus 24,000 will gives you 2,16,000. Please, it is a depreciation chapter having lot of clerical works. Please, my dear student, be careful. Work out the total, it comes to 2,40,000. 2,40,000. Let us move on to second year, that is 1st April 17. What to write? To balance brought down, it comes to rupees 2,16,000. Right? In second year, what happened? In second year, on April 17, M2 is purchased. When? Same on April 17. M2 is purchased for an amount of rupees 80,000. I think only that thing happened in second year. M2, part 1 is sold in next October 18 and also purchased M3 in October 18. Only that much. Only one machine is purchased in the second year. What about total depreciation? 16,000 plus 32,000 plus 16,000. It comes to total 64,000 on what date? 31st March 18. By depreciation account, total depreciation is 64,000 by balance carried on. Close completely. It comes to 2,96,000. 2,96,000. Work out the difference, my dear student. It comes to 2,32,000. Now you brought down for 1st April 18. Two balance brought down 2,32,000. Finished. Now we are in the last year. What happened in the last year? On October 18, part 1 is sold. What is sold? Part 1. When? 1st October 18. By depreciation, by bank as a sold, by P&L as a loss. See, 8,000, 27,840, 8,000, 27,840, that is sold value. This is depreciation value. This is loss value, 20,160. Now, at the end of the year, 31st March 19, we have to calculate by depreciation account. See, what was the depreciation? Add all these numbers, 32, 16 and 4. Is it 52,000? You write that 52,000. Date dot by balance carried on. You work out the total. 2,32,000. 2,32,000. What was the balance carried on? The balance carried down out of 2,32,000, subtract 8,000, subtract 27,840, subtract 21,160, subtract 52,000. You are getting a balance called 1,64,000. That is to be brought down for the next year. I hope you got it, my dear student. What is the speciality of this problem? The speciality of this problem is part of the M1 is sold. What? Only 1/3 part of the M1 is sold. Remaining you have to go through. Did you understood? Please go through these problems, solve on your own self, put effort in learning. Okay? Prepare well for your forthcoming exam. All the best. Please go through all these things. Did you understood the entire things of preparation of ledger and all? Bye bye. Take care.